Hey guys, what's up? I'm Erin and welcome back to the channel. As of January 2022, inflation is running at about 7.5%. Just 12 months prior, it was sitting at about 1.4%. The last time we had inflation this high was 1982. That's 40 years ago. Going back to 1944, we see that the US has had 6 previous noteworthy inflationary episodes, aka times when inflation has risen above 5%. Those being the mid-40s, the early 50s, much of the 70s, the early 80s, and briefly in 2008. I'm sure we can all recall those surging gas prices of 2008. Going back to 1944, that's almost 80 years. And in those 80 years, we've had 7 inflationary periods. That's not all that many. We've been very blessed with low inflation for much of our nation's recent history. Well, actually, we had a booming stock market and low inflation, which felt like a really good situation to be in. And now we have a very turbulent stock market coupled with high inflation, and it doesn't feel so good. Historically, many of the inflationary periods were driven by wars or by oil prices. However, this 2021-2022 inflationary period is primarily driven by supply chain shortages, which primarily came about because of a pandemic. So the good news is it should be somewhat temporary in nature. If you look at consumer demand, demand is high, more than what is typical. Spending is especially apparent in the consumer goods sector. Spending in this category ranges from 15 to 20% above average. So this surge in demand is putting extra pressure on suppliers and manufacturers who are already struggling to meet typical demand, let alone elevated demand, because they're facing a shortage of workers. But they have a really great incentive to get these supply chain shortages ironed out and get those shelves restocked. It's also noteworthy that consumers have spent the last year spending less in the service industries, because of that pesky pandemic. So rather than going out and traveling, booking hotels, booking flights, spending money doing things, they've spent their money on goods, putting more pressure on the supply chain and more pressure on the goods market. So in a roundabout way, all of these world-class economists saying inflation is being driven by this high demand for goods, maybe these economists are just saying inflation wouldn't be so bad if we just spent a little bit less. So you know what a better plan would be? Save and invest your money. Grow your wealth. Ensure that you are adequately prepared for your future. Live below your means. Is it sexy advice? No, but it's still good advice. And what better time to invest in the stock market than when it takes a dip? I love this advice. I think we should all try it. Just spend a little bit less money. Okay, so maybe it's not that simple, but it's still a good idea to save and invest. Now, it would be really nice to say that once all those supply chain issues are all ironed out, inflation would come back down and go back to that 2 to 4% range that we've all come to know, expect, and love. But there are 2 other issues that we have to consider: the labor shortages, as well as the recent surge in home prices. As people get more and more comfortable doing activities again, it means they are allocating more and more dollars towards those service industries again. But unemployment levels have already returned to pre-pandemic levels, yet industries like hospitality are still struggling to find employees. This suggests that the nature of work that people are willing to do post-pandemic may have shifted. And if that's the case, it may affect the US's ability to provide goods and services that their consumers want. So only time will tell what happens with this. The other thing to consider is that surge in home prices. As home prices go up, so too do rental prices. At least usually that's the situation. And as we saw, that 2021 housing market was absolutely on fire. And all of these landlords who bought properties are going to want to get a fair market rate from their renters. After all, they took on the risk of buying a property. They should be adequately compensated. So I would expect rental prices to be higher going forward, especially in those areas that saw the biggest surge in home prices. But it's unlikely that this factor alone would keep inflation high. But in the meantime, what do you do? How do you protect yourself against inflation? Well, one thing's for certain, you can't just simply park your money into a savings account. At that point, you're literally losing money's value at the rate of 7.5%, and that number is just painful to say. First and foremost, I know this may be a little bit vanilla to say, but I think now it's more important than ever to be conscious of your spending. Reduce your spending wherever possible, because if you reduce your spending, you're going to feel inflation less. Of course, there are essentials that we all have to buy, like food for our pets, or gas for our cars. But not everything is essential. Maybe right now is not the time to go buy new clothes or new furniture for your house or any of the other hundreds of things that we tend to buy on a regular basis but truly aren't essential. Like right now, the car market is absolutely insane. And unless your car has absolutely gone kaput, now is not the time to be shopping for a car if you can avoid it. If you have to get one, you have to do what you have to do. But if it's just a desire to upgrade, I probably wouldn't do it, especially if inflation is a concern, because you'd be diving headfirst into a big ticket item that has a really big inflated price tag. So maybe now the best thing you can do is sit down, look at your budget, and trim the fat, so to speak. Next up, now that you've looked at your budget and you've found some extra money, let's put it to work. Well, if you know my investment style, you probably know what I'm going to say. I like to invest in the stock market, and I particularly like index funds. Yes, I am fully aware the stock market is acting a little bit wonky right now. Yes, since the start of the year, it's down about 10%. But you know what? From 365 days ago, it's up 11%. From 5 years ago, it's up 80%. What the market is doing today is not what the market will do forever. Today and this period of time is just a blip on the radar. Long term, the market goes up. It doesn't do so in any predictable fashion or in a smooth manner, but long term, it goes up. Quite frankly, the way I see it, you can't afford to not be invested. Sure, you may be scared of market volatility, but if you leave your money on the sidelines and you don't invest, you just ensure that your value will be eroded by inflation, leaving you unprepared for the future. Let's put it this way. The stock market is a collection of all the major businesses in the United States. The odds of that going completely bust are not good. And even if that were to ever happen, I think we have larger issues at hand than just the investment accounts. That means our entire economy imploded. That's a problem. Hopefully Elon Musk can get us to Mars before that happens. Now, of course, there are other investments that can help you hedge against inflation. I know often you hear people cite gold as a good inflationary hedge, but historically, it just hasn't provided the safe haven promised. Personally, I'm not a huge fan of gold. It seems unnecessarily volatile. However, I know there are people who like to have some investment exposure in this investment class. It's just not my favorite. I do, however, look at commodities as a great option. The prices of commodities typically rise with the price of inflation. And the most convenient way to invest in commodities is through an ETF or an index fund. And I really like investments that are easily bought and sold. So if you're heavily concerned about inflationary pressures, commodities can be a great hedge. And historically, commodities have actually been a better performing asset class than stocks during inflationary times. But it is important to note that long-term, commodities have actually underperformed the S&P 500. But that just brings us to the importance of having a balanced portfolio. And finally, we have real estate. Real estate has been a good safeguard against inflation as the price increases of real estate have historically outpaced inflation. If you own a home, that can serve as a good hedge against inflation as your home's value is likely increasing over time. Now, of course, homes all around the country increase at different rates. It's not one uniform rate throughout the country. Different cities, different areas, they go up by different amounts. And keep in mind that your home isn't really all that liquid. You don't realize the gain until you actually sell it. But if you're in your home long term, likely its value is going up, so it can serve as a hedge against inflation. Of course, you can always consider the route of investment properties or REITs. Personally, I love REITs and I think they're good to recommend to everyone because it's an easily accessible form of investing in real estate. They're easily accessible mutual funds that you can start with just a small dollar amount, especially when you compare it to putting down a down payment on an investment property. I think the big thing to keep in mind in these moments of economic uncertainty, whether it's inflation, whether it's a turbulent stock market, or heck, even a pandemic, that nothing lasts forever. This moment will pass. Likewise, when the markets are booming, like back in 2021, when the S&P bestowed upon us a 27% return, that moment passes too. Nothing lasts forever. You can't expect that long term. Change is our only constant, and you do yourself a good favor of not really worrying too much about it, because no matter what situation you're in, it will likely change. I am an eternal optimist. I always assume that things are going to work themselves out or they're going to get better. But I'm also a realist, and I acknowledge that tough times happen. But the way I see it is you just deal with it and you move on. Will this inflation last forever? No. Likely things will return to normal, or we'll find a new normal. But this is not going to be the last time we experience market volatility or inflation. These things will roll around again. They may not repeat themselves in the exact same way, but they will happen again. As Mark Twain said, history doesn't repeat itself, but it does rhyme. Well, that's gonna do it for me today, guys. I post new videos every single week. If you got anything at all out of this one, please give it a like or leave a comment below letting me know your thoughts. If you're new here, consider subscribing, or if you know of anyone who might get something out of this type of content, please consider sharing, as it really does help the channel. I hope you have a good one. I'll see you soon. Bye.